What's going on, guys? Welcome into your Energy News Beat here on this gorgeous Thursday, February 25th, 2021. As always, I am your humble correspondent, Michael Dinner, coming to you from an undisclosed location here in Denver, Colorado, joined by the executive producer of the show, the purveyor of the show, the director and publisher of the world's greatest website, EnergyNewsBeat.com. Stuart Tully, how you doing today? It's been a long day for you. You just got off the Jay Young show.
Oh, it's a beautiful day in the neighborhood, and I love Jay Young and Ryan Ray. We had an absolute blast. We'll have the show in the show notes. It was
Now,
great fun.
it was, and we're getting the Three Stooges back together for a webinar we're holding via Samsung. You can check it, sign up for that in the show notes here. We have a great show for you guys. You can check out all of that and a bag of chips to my left here. But again, continue to subscribe. World's greatest YouTube channel, Energy Newsbeat. Also, check us out online, www.energynewsbeat.com. It's legit just an IV of news into your veins if you need that injected. We had somebody ask, Scott asked about the app. It's not quite available yet, and I might have overhyped it. We're about 2-3 weeks away from getting that thing rolled out, but it's going to be great. It will be available on Android. It will be available on Apple, so just wait about 2-3 weeks. It's going to be awesome, though. I can't wait till you to download the app, but we've got earnings to cover, natural gas inventories, but we have to spend a little bit of time talking about what happened in the equities market because, guys, holy smoke, Dow off 560 points today amid a huge market sell-off. I'll read you top-line indices. Buckle up. This isn't good. SPY down 2.45 percentage points. NASDAQ tumbles 3.56 percentage points. Dow Jones, as I mentioned, finished down over 2 percentage points or 661 points on the downside. The name of the game today was yields. Major averages, including the 10-year yield, sold as high as 1.6 percentage points in what was really what we would like to call a flash move on the upside. Rates ended up settling 1.52 percentage points, the highest level since February 2020, and that's about a 15 basis point move after we saw, to give you an idea, we saw 28 points in 20 days. We saw 15 points today. Whew! Guys, reason why NASDAQ gets tumbled hard is because they rely on slow and cheap debt to be able to continue to fund their growth. So not good for a lot of these tech companies. To give you an idea, Tesla down 8 percentage points. Facebook, Apple, and Microsoft, they're down 3 percentage points. At Google, they were down 3 percentage points. Worst sell-off since January 2017, and on the tech side it was the worst sell-off since October 28th. So just an unbelievable day. And what's crazy is on the data side, jobless claims, or what we would call first-time jobless claims, only totaled 730,000. And while that's still a lot, we were expecting a print of about 845,000. So over 100,000 less filed for unemployment, and we still go ahead and absolutely tank. Energy was actually down today, but oilfield services was up. For this entire week, energy's up, but just a massive sell-off. Rates are coming back into play. Meeting notes from, the signal still from the Fed, though, as we heard the past 2 days when Jay Powell's in front of the House Financial Services Committee yesterday and the day before the House or the Senate Banking Committee. He said, we're not worried about inflation. We're going to continue to pump money in the economy. We know that, there's the Senate votes on the $1.9 trillion stimulus plan that has the direct payments of $1,400 amongst some other things. And that vote goes down Friday or tomorrow. So it's going to be very interesting in my eyes to see where some of that goes. I don't even know, the real question, Stu, is can stimulus save us at this point?
Nope.
That's okay. There you have it there, folks. Mic drop. I think it can. See, here's the thing. Will the bubble? Well, you're not wrong, but I think like people say, well, the bubble's going to burst. Well,
Yes.
bubbles don't just burst like that. They happen in drips and drabs, and you look back, holy smokes, that was the bubble bursting, like the tech boom. Remember, it was 2 years when a lot of this initial stuff happened before we would consider it tanking. When in 2008, the same thing, it was a whole summer and really a 6-month process rolling from October of 2008 all the way until mid-2009 on some of that stuff. So is this the beginning? Probably, but to say that it's
Michael,
just flat out no, it's a good line, but
if and sorry to, no, but if you take
it's
a
how you
look
feel.
at
It's fair.
and the $1.9 trillion is not well defined and is spending in pork. If all of that was in real projects, real money, going to the disproportionately impacted communities and going to where it needs to, yes, I think it stood a chance.
Yeah, I mean, a lot of pork, Stu, but what's new? I mean, what'd you expect? What'd you expect? I'll take my
Hey,
$1,400 though. So you know. So hey, Stu, now that you're at Sandstone, you're eligible, baby. Don't worry, you're eligible now. So you're at high in it. You're hanging on every stimulus vote. But all in all, I know we spend a lot of time in the equity markets today, but I mean, oil's pretty bland today. We saw nothing interesting besides earnings continue to roll out. Big sell-off. Hope your guys' 401ks are all right. Crude oil, speaking of that, finished flat, only down about tenth of a percentage point, 63.41. Back end or front end of the Brent curve, 66.97. It was trading about $67, but that's pretty much even for whereas back end of that WTI curve, 59.56. Natural gas finishes flat after a 383 billion cubic draw. I mean, we expected that. I think a lot of people thought it was going to be bigger than the 359 billion cubic feet draw that we saw back in 2018. We didn't quite see that, and I don't think we'll necessarily get to it next week just because I think some of this weather is warming up a little bit. So I don't think we're going to be using as much natural gas. But we will see back end of the curve ends up down about 3/4 of a percentage point, currently trading $2.93. As I mentioned, our XOP contract was down 3 percentage points today. No shock there. But OIH, which oil field services, actually gained about 1/4 of a percentage point. So not bad on that front. For all you Dogecoin holders, it's down 9 percentage points after the SEC says they're going to investigate Elon Musk for tweeting about it. I mean, no joke. Elon Musk is getting investigated by the SEC over a fake, not a fake cryptocurrency, but it's based off a meme. It's just unbelievable. But buy the Doge, hold the line, people. Let's go ahead and look at some of our equity movers on the downside. I mean, big numbers today. BTU didn't have a great day. Peabody, they're down 14 percentage points. Camber Energy, they're down 15 percentage points. American Resources Corporation, they're down 20%. And Warrior Met Coal, not good day for coal. They're down 22 percentage points. I mean, when does coal have good? Coal's not having many good days. I'd love me a good coal worker. I love me a good train pulling coal, but coal's not had the best coal days are far and few between.
I still think that coal is a huge part of our, and especially coking coal. When you're talking about trying to make steel, got to have steel.
Oh yeah, no, it's just investment wise, you ain't having that PR. It's
No.
almost like if you're almost like cigarettes if you're a coal company. You're almost like having to. It's like defending cigarettes. It's crazy.
You got to find a right investment or IR guy. You got to find the IR guy.
That guy's the IR. Any coal IR guy, you're IR guy of the year retroactively because it's been a tough couple of years. Holy smokes! On the upside, we got some good movers. Cosmos Energy, they're up 1%. Houston America Corporation, they're up 5 percentage points. PDC earnings dropped today. They're up 6 percentage points. And Phoenix Minerals, they're up 7 percentage points. Stu, you've got a couple international stories. What's going on?
Oh, we got a few, Michael. Okay, first one coming out of the block. We got our buddies over there in OPEC coming up on March 4th, and that's going to be a lot of fun. There's a lot of jockeying, Michael, going on in between the players right now. And as of February, it's still withholding 7.1 million barrels per day, or about 7% of the world's money. Russia is still trying to pump out more. So hold on, March 4th. That's what we'll be reporting on there. Other story here is our poor folk in
Yep.
Nigeria. They're having a heck of a time. Nigeria is losing 200,000 barrels of crude today, or 10% of their output, to thefts. And unfortunately, oil is 90% of the government's budget. 90%. So they're getting stolen. They can't provide goods and services for their citizens because they're getting all of it stolen. So our hearts go out to the Nigerian folk.
ISIS just recently hired a petroleum engineering student to help them with all this oil they're getting. I'm just
Oh, I thought you were about to say they hired a new IR guy.
No, they did. Well, his background's in petroleum. ISIS is a petroleum company, actually. They just incorporated on the Saudi stock market.
Did they really?
No, it's a joke, Stu. Because
I was like,
they're
oh,
stealing.
geez, you got me, man.
Slick. No, I mean it's.
What are you gonna do with me?
No, exactly. What are you gonna do for me? You could check out anything else on the international news desk. It's been pretty light the past couple days.
You bet. Thank goodness.
Yeah, so you could check out all of those stories via the world's greatest website, EnergyNewsBeat.com. As I mentioned, natural gas inventories, they came in about 330 billion cubic feet draw. I don't want to say record, but going back to 2018, biggest draw was 359. I personally thought we were going to beat that. We saw what all happened in Texas this year or last week, but because a lot of that natural gas refining was actually down, it's still some you could say this is a bigger draw than we should have had. I think it's a little less. It's up for interpretation, but I think it's good to see us getting back in that line. We've got 3 earnings to cover here real quickly: PDC, Baytex Energy, and QEP. It's kind of a opposite story for both. We'll start with the upside. PDC, they're up 6 percentage points after they announced really decent earnings. They provided $220 million of free cash flow from operating activities, and they set their guidance. I'm going to give you guys a breakdown here. Where did it go? Here we go. So, guys, to give you an idea, they made about 4 cents a share, which was not over what analysts expecting. They were expecting a little bit of a loss at about 2 cents a share. So that's partly why you're seeing PDC come up. Another reason why you're seeing them up is if they've now fully been able to have 1 year. Remember, last year they bought SRC Energy. They fully now integrated in with them, and you're starting to see some very interesting cash-saving numbers. They ended up with $400 million of free cash flow for the entire year, and they were able to increase, and that all led to increased capital expenditures for next year to $500 to $600 million. And this is what I find very interesting. For every $5 change in the NYMEX crude oil price, it's about an extra $50 million of free cash flow. It's really interesting. They have a huge breakdown of how they say. So, you guys see, this is why the upside. That upside means a lot, baby, because these companies take a street like their earnings. They're up 6.6 percentage points. Baytex, we love them north of the border. Wasn't a great year for them, wasn't a great quarter for them. They're down 8 percentage points. They had $2 million of free cash flow. They were able to, what do we have here? On a per share basis, they actually made about 39 cents a share, which is great because in quarter 3 they ended up losing about 4 cents a share. I just think the issue is the Canadian oil and gas play. I think they get hit for not really being strong in the Montney. I think they're everywhere else they're really good, but when you talk about what the evaluations up there, and I'm not a Canadian oil guy, so someone come out and check me, but these guys just aren't seeing some of the returns that are coming back solely because they don't own what the street would consider good acreage in Canada. We're talking about regulations in America. There's some stuff coming down to Canada that'll be absolutely nuts. So, tough year for our friends up at Baytex, but they're going to get swooped up by somebody. Speaking of getting swooped up, QEPs, this is the last time we're ever going to hear their earnings. They're going to go ahead and shut down operations. Diamondback went ahead and bought them about 6-7 months ago, but this is the last time they'll be see it. We'll see one of them. Pretty good. They generated about $673 million of net cash from operating activities. Their net loss was $130 million for the fourth quarter, or about 54 cents per share. That was compared to a net loss of $110 million last year. So even in non-COVID, they were still losing a little bit. They did make about $25 million in cash gains from derivatives payments, and those are all settled because the merger is going up. So they're basically clearing out all their hedges, moving back over. I don't like, I think QEP acreage by their own isn't great. I think with Diamondbacks, with their ability to absorb, a smaller debt piece of this, which isn't too terrible, they were down, QEP was down 6 percentage points, but mainly because no one's buying them anyway, because they're all Diamondback. If you're buying them at this point, the premium at which they were bought at is basically non-existent anymore. So, We're getting close on earnings here. We've got some more obviously coming up here. I don't have the spreadsheet up in front of me. Let me see if I can just do that right now. We've had a lot. We were backdated this week a lot, Stu, because the storm in Texas pushed up. Speaking of Diamondback, Oxy pushed back a little bit. So there was, we were busy these past 3 days because we had a lot of people shifted back because of the weather. Let's see here. What do we got on the 26th? Yeah, we got EOG. We got EOG. Forgot about that. Southwestern we'll get tomorrow. We'll get PG&E. So we'll see how some of the electrical companies are doing. So we got some coming up here. But we're on the back end, thank goodness, of some of these earnings. I'm tired, Stu. So we're gonna let them get out of here. Get back to work. Finish up your day. Again, thank you for checking us out. World's greatest show, Energy News Beat. For Stuart Turley, I'm Michael Tanner. See you guys tomorrow.